Welcome to today's video. Before beginning, please read the trade disclaimer. Please understand that this is not financial advice, just my commentary and opinion. Hello everyone. So in this video we're going to be looking at a rising wedge, which is the opposite of a falling wedge. So in effect we get the same sort of scenario. Price comes in or from the bottom. We create a point 1, price touches, makes a point 2, then makes a point 3, a point 4, and then effectively, has a potential to break down on point 5. Okay, so in this scenario, we're going to be looking at where our stops are going to be, our potential take profit targets, and how we measure them. So in this case, as before, we will take the line tool and we'll measure from point 1 to the high of point 2, where we get the turn. Okay. And then this would be our potential target to the downside. So one thing to understand, the rising wedge in itself will be where we would look for a breakdown on the downside. Effectively, our entry can be based on the effective breakout of 0.5 on the lower side of the rising wedge, or on the retest of the rising wedge, where we reject on the lower part of the wedge as potential resistance. Okay, so now we've found out roughly where our potential take profit targets will be. Let's mark this out. Okay, so what we want to do next, as of now we've marked this, we'll remove this. So we want to now look for a potential area of how price could get to that point. So in this case, if we did break out and then price was to retest back effectively on the breakdown, we could potentially go to this target here. That would be one scenario. Okay, and then the other scenario we will look at is price breaks out down, and instead of retesting the breakout or the breakdown, we retest the high of the lower part of the wedge, and then come down to our target. Okay, so we want to have both these scenarios in mind when we set up our trades, and it is important because ignoring one of the other could result in a trade going out bad or getting stopped out way too early. Now, the areas I would be looking at for potential stop loss, so in this case would be this line over here, which is the last high on 4, and that would be our effective, stop loss area because it's the last high. Okay, so now what I want to do is look at how we would enter the short position and where our targets will be. So in this case, our target is here. We enter on that break, okay? And our stop loss is on the high of 0.4. So in this case, what we will do is look at one possible scenario. And in this case, price, breaks down and then retests our entry point and hits our target. So if we entered on the breakout or on the retest, we can see, this trade has a potential to become successful. On the other scenario, which we'll look at, is this. And in this case, because due to the angle of the wedge, there is that potential or that chance in this case where we could have got stopped out. So at this point, you decide by looking at this, is my stop going to be at 0.4 or slightly higher? And this can occur on any of these triangle patterns. Okay, so in this case, we just missed being stopped out and then we hit our target. Okay, so these are the two scenarios we're looking at from the entry of this breakout. Let's look at another one. So in this case, we'll move our stop loss to the middle of the wedge, effectively here. But as we have the wedge growing up like this, you may move this further down up here. So approximately from this height to up. So we enter again, but this time our entry can be based on a retest. So let's hide these potential points. So if we were to retest the price on the breakout, say here, and my stop loss was again at this level, and we targeted this point here. Okay, and then let's look at the different sort of scenarios. This would be very good because again we retest, and although this may seem like it's near 0.4, however it's slightly higher because it's based on the wedge, rising wedge in itself. So in this case we managed to get, and we catch it on the retest or on the breakout, and price hits our target nicely. The other pattern that, way we can see, in this case, our stop out is far away. So technically, we could have entered, gone into some drawdown, and then gone back up to our target. So that's another scenario. So let's look at another possible entry. This time we could say what we're going to do is wait for price to come out and then retest and then go. And this could be based on the retest of the breakout. So I would want to enter ideally further down around here. My stop loss in this case can be, say, on the wedge itself to this point. Okay, and that is how I may enter. So let's look at scenario 1. So in this case, price comes down as natural. We get the normal pullback, and we put a entry here, which is confirmed as maybe a reversal, and then it hits our target. In this case, obviously, the risk to reward is slightly lower because our stop loss is basically on the lower part of the rising wedge. Okay, so that's one way to look at it. If we look at it from the other scenario, again, in this case, even though we did hit it, the problem you may get is depending on where your entry is or where we potentially could bounce off, that's when you'd enter. But in reality, the way this would work, if we did retest the bottom of that wedge, what you'd be looking at is a potential entry on the bounce, and you may then enter around here, and then your stop loss could be set on the top end of the wedge itself to give you enough space. And again, this can then result in a better risk to reward. So it all comes down to, it's very, again, what you'll see from these different scenarios is where one could potentially get stopped out and not. So if your stop loss is too tight, yes, your risk to reward is high, but at the same time, you can get stopped out very easily. And if your stop loss is too wide, your risk to reward then drops. So it's a matter of testing which method works for you. There are in between levels. Again, you could potentially remove that and say my stop loss is going to be based roughly on that center of the wedge. So you could use that area as your stop loss also. You need to have a valid reason why you would use that. Okay, and again, your entry can be based on the breakout of the retest or further down. And in this case, you also then need to remember if scenario 1 was to occur and you base your entry like this, you could potentially just miss the entry to a very good potential trade. So that's something to look out for. And again, as mentioned before, I would not want to enter on the risk on this level here, say maybe a 0.4. Again, on the basis of getting extra potential profit. And the reason behind it is you could end up with a scenario where you have a stop loss further out and price comes down here, retests, and then effectively breaks out. And you don't want to be in that position. So because of that, I wouldn't recommend to do anything like that. So if you are trading this pattern, you'd want to use it on the breakout. Okay, let's move on to the next pattern. Thank you.